Well, following the pandemic, it looks like hybrid work is here to stay, with office attendance in major cities across the world stabilizing at about 30% below the pre-pandemic average. So what does that mean for the state of office and retail real estate? A new McKinsey report aimed to examine just that. Joining us now for more is Robert Palter, Senior Partner and Canadian Office Managing Partner at McKinsey. Thanks so much for joining us today.
Thank you for the invitation.
So you are looking globally at cities around the world in terms of, where things sort of stand right now, how they've changed since the pandemic and where they are at right now, and then looked ahead to how things could evolve from here. But maybe we could just start with how far we've come and where we're at in this moment when it comes to demand for office and retail space.
Yeah, well, as you've seen in our report, demand for office space has slowly been increasing back. And obviously the response differs by city around the world, and we lay that out in our report. The highest level, what you could say today is by and large around the world in the larger, what we call superstar cities, which represent a disproportionate share of jobs and GDP activity, office attendance is not yet back to pre-pandemic levels. Some places, as you said, it's 30% below, some places 20, some places it's 40, but we're not back to pre-pandemic levels. And it's probably getting a bit harder to believe that in the short term, we are going to get back to pre-pandemic levels of in-office attendance.
And we're just looking at some of the data when it comes to industry in terms of the number of days that people are spending in the office. I know it also depends on the employee number as well. You found how big the office or how big the organization is can also influence the number of days people are coming into the office.
Yeah, this was I think one of the more interesting insights that came out of the survey that we did that lays behind this research, that when you survey a global cross-section of people across all sorts of industries, be it professional services, utilities, real estate, manufacturing, retail, and wholesale, and you survey them by company size from as small as 2 to 3 employees up to 25,000 plus, you actually see a very significant dispersion in the number of days people are spending in the office. And what our report points out is what we found is people who are generally working in the larger professional services firms are probably spending about 2 days a week in the office. When you look at things like retail, trade, or utilities and smaller companies and things like healthcare, it's upwards of 4 days a week in the office. But what is noticeable is smaller companies tend to have more people in the office as opposed to larger companies.
And then, I mean, if they're only spending 2 days in the office, they might not be doing some of the, shopping or errands that they were doing if they were coming to a downtown core. That's something you looked at, too, in terms of the urban or the more suburban divide when it comes to foot traffic near stores.
Yeah, that's actually what precipitated this research, which was we were looking at a lot of the research that was being done at the peak of COVID, looking at individual asset classes in real estate. And lots of great research has been done and lots of interesting articles have been written about the impact of COVID on office or on residential or enclosed shopping malls or commercial or industrial. What we observed, though, just based on working with our clients, is that rather than looking at the individual real estate asset classes in isolation, you actually had to look at them as a bit of an ecosystem, because where people live, work, shop, play actually all go together. And the core of this research was to study the interplay between changing dynamics as to where people live, work, shop, and play as it relates to the dynamics between office, retail, and residential.
When you're looking at where we go from here, is there more of a return to pre-pandemic levels, do you think, in the future, or is this sort of where things may end up settling out?
I'd love to be able to offer you a very simple, precise answer to that question.
I keep asking it, but I know it's not out there.
I wish there was a simple answer to a complex problem. Our view on the question you asked is the answer depends a little bit by city that you're looking at. And as you saw in our research, how COVID has impacted cities differs kind of dramatically. And in fact, one of the core points of the research is how COVID has affected different parts of any individual city is how you should think about it. You saw in our research, we did an exploration of New York City and the boroughs in New York, and how the different composition of real estate in Brooklyn versus Midtown Manhattan, right? Brooklyn being less office dense, more residential, more retail versus Midtown Manhattan, which is predominantly office, leads to different outcomes on things like demand for office space, demand for retail shopping space, demand for residential. And so I'd love to give you a simple answer, but I think at the highest level, one of the conclusions you can take from this report is parts of cities that tend to have a very high density of office in a borough or a district relative to their density of shopping and residential may struggle to really get back to some form of economic vibrancy that we had pre-pandemic versus parts of a city where you have a more balanced mix of office, retail, and residential, because that allows people to live, work, and shop within a reasonable distance of each other and allows those forms of real estate to feed off of each other and benefit.
Robert, a really interesting